To return to Donald Trump's tariffs now, you've been hearing all morning that markets around the world continue to plunge. Fear and uncertainty is growing about the impact that those tariffs will have on the global economy. Well, here to tell us what she believes may happen as we go through all of this is Martina Lawless, who's research professor at the ESRI. Martina, good to have you with us.
Thank you very much.
Difficult to predict. I mean, we are seeing what's playing out this morning with the markets, but I know that you've studied trade and tariffs extensively. We last spoke to you during Brexit when we were also concerned at that time. But the potential impact, firstly, that the disruption might have on Ireland. So how bad could this get for us?
This could get extremely bad for Ireland. At the moment, the 20% tariffs that have been applied to the EU have an exception for pharmaceutical products. Now, that's about 60% of our exports to the US. So as long as pharmaceuticals aren't affected, that's a bit of a relief. If pharmaceuticals are impacted, and there's still very much uncertainty about whether the tariffs will come back on those, the ESRI have kind of calculated that that could cause a hit of GDP being 3.5% lower, which is essentially all growth in the economy almost wiped out over the kind of medium 4 to 5 year term.
Right. And we know from our conversations with Simon Harris and with others here over the last week that they certainly believe that pharmaceuticals will be placed on the table of tariffs before long. If that doesn't happen, though, what will the hit be?
If that doesn't happen, the hit will be a bit lower because they are almost half of our exports. At the same time, when you think about tariffs and how they impact kind of prices, it depends on how quickly the firm passes on those prices and how consumers react to those prices. So the tariffs that have been brought in on Irish products like food and drink and the dairy sector, those are products that it's a lot easier for customers in the US to switch away from, to find alternatives for. Whereas on pharmaceuticals, if you're prescribed a medicine by your doctor, it's hard to find an alternative. So the response from the US consumer side is likely to be kind of greater on those Irish domestic products that are being sold into the US market.
But just going back to the pharma again, I mean, that is a difficulty for Donald Trump, isn't it? It's harder really to restrict access in any way to those products.
From the domestic US perspective, tariffs on pharmaceuticals is a very disruptive call to make. As you said, prices have to be passed on to consumers. There's very little alternatives. It will put up prices. It will put pressure on US consumers very, very quickly. And it's not an area whereby the jobs can be moved back to the US anyway quickly. These are very large, very specialised plants. Nobody in the industry would say that this kind of manufacturing could be moved back to the US in anything less than a 3 to 5 year timeline.
The Irish government's argument here is that this is a very complex supply chain, in that some of the items that are manufactured or produced here are then sent to the US for further refinement for the consumer market. And there are actually American jobs working, very many American jobs relying on that part of the industry.
That's true for pharmaceuticals, and that's true for the way the tariffs in the US have been applied to everything. So the focus will be on obviously what we sell to the US and the impact that will have on US prices. But for firms within the US, these tariffs apply to everything they're bringing in as part of their supply chains as well. So even for goods that are manufactured within the US, you could see prices go up because the cost of their inputs are also being affected by these tariffs.
We're in a difficult position here, aren't we? Because our economy is so reliant on the United States market. We're in a difficult position when it comes to the EU and their conversations today on how to respond to this.
We're very much the most exposed in terms of we have the largest share of our exports going to the US. It's about a quarter of Irish exports compared to 7% for the EU as a whole. We also have a very large number of US multinationals located in Ireland, both in the pharmaceutical sector and also in the ICT sector. So the Irish government, I think, will be by far the most cautious about retaliation because of the damage that could do to the Irish domestic economy.
And what is the right strategy from your point of view and the work that you've done on this? Because we do have the two schools of thought. There's the sit back and wait, the UK example, and then you have what Canada is doing, which is fight fire with fire.
Well, I think because tariffs affect both the domestic economy as well as the economy you're trying to target. Any retaliation would put up prices and cause disruption for European consumers. I think the best idea, the best approach is to sit back and wait. These tariffs will do a lot of damage to the US economy, to US prices, to US stock markets. And I think allowing some of that direct impact on the US economy to play out and the domestic pressures in the US to build rather than retaliate quickly is probably the kind of best course of action.
So the pressures on the economy and the resultant political pressures then, just allow that to happen, sit and wait?
I think so. I think there will be a lot of pressure building within the US from anybody with investments, from large firms being impacted as soon as the prices start to pass through to consumers. So I think that direct impact within the US will be felt fairly quickly. And so the EU a little bit could sit back and let that play out before deciding on any retaliation.
Yeah, I mean, Ursula von der Leyen has been among those reminding everyone, including America, more pointedly probably America, how important the EU is in terms of a market, 450 million people. I mean, there is a lot of damage that the EU could do by introducing tariffs on US goods. There will be those who will believe it's time to unleash that power now.
There will. At the same time, one of the reasons the EU has been hit with the 20% tariff is because we do sell a lot more to the US than we buy from them. So the tariffs in retaliation on US goods would probably be smaller as a share of the total sales here. But also I think the European Commission are much more aware than the US administration have been about the negative impacts on tariffs feeding through to consumer prices. So when you look at the goods they're talking about targeting possibly today, bourbon, large motorbikes, they're very deliberately trying to avoid putting tariffs on goods that would be kind of widely used within the EU or used as inputs for EU businesses to try and send a signal, but minimising the economic damage that those tariffs could do.
But that signal is really important. And I got that message as well from our own Commissioner, Michael McGrath, when he was in here on Friday. The response to the steel and aluminium needs to send a very strong message while you're holding back on retaliation on the 20%, on the substantive tariff.
Yes, and I think that's what they're trying to do by sending a signal to say we can retaliate, we have the mechanisms in place. They can put tariffs not just on goods, but they can put restrictions on the US tech companies that are also operating here. But I don't think they want to do that too quickly. And I think letting some of the damage of the tariffs play out in the US and have the political pressure build there might be in the longer term interests of Europe.
Just looking at what's happening with the markets overnight and then into today as well. Let's say this issue was resolved in a short period of time. Let's imagine Donald Trump rolls back. Is there already substantial damage caused by what he has done? Is it going to take a while to unwind?
I think it will take a while to unwind. I think the uncertainty that this has brought into economic policy will take a long time to kind of be restored, the confidence that people would have in the markets. And remember, that confidence plays very much into firms' willingness to invest. And I think we'll see that very much over the coming year, that firms that maybe had plans to open new plants, to expand all across the world, will now be holding back on those investments. So even if the tariffs get undone quite rapidly, I think that kind of the uncertainty will put a kind of freeze on investment, certainly for the next few months.
But that's going to be, that problem is going to be huge for America, more so than anywhere else, because, you might say to yourself, well, if these positions are unwound, there'll be certainty in the EU because we know what the rules are there. But if you were looking at investing in the United States, you don't know what's going to happen next.
I think that uncertainty definitely will be felt most within the US, and businesses there will be very cautious about what they're doing next, and particularly these large global businesses that rely on complicated integrated supply chains where they're buying parts and moving goods around all around the world. They will be very reluctant, I think, to put any sort of large scale investments in place in the coming year. And you could see that a lot of the worst hit stock markets this morning were in Southeast Asia, where a lot of big US companies have plants, and they're now very concerned about, how those operations kind of continue to go.
But Donald Trump will say he's got a queue of 50 countries waiting to negotiate with him. We have Taiwan and South Korea saying we're going to drop any restrictions on the United States trading here. For him, it's working.
I think this is almost more a sort of a political playbook than an economic one. The economic argument is firmly that tariffs just do damage everywhere. But using tariffs as a bargaining chip is obviously something that the Trump administration believe will get them better access to markets, will get deals done on maybe other areas of US policy. In terms of Europe, I wouldn't be surprised if defence spending comes into the negotiations, even though that's really nothing to do with the tariffs. The issue there is that the level of tariffs on countries in Southeast Asia like Vietnam, Cambodia, those are very high because those countries don't buy nearly as much from the US as they sell. But that's because they're locations for low-cost manufacturing for goods that the US wants to buy.
So America has sought them out.
They've sought out the products that they buy there. But they're still relatively poor countries, and therefore they don't buy as much from the US. So slapping them with big tariffs in order to get greater market access, it's not clear that that's a great argument for a lot of these countries. They don't have the finances to buy lots of high-end US goods.
Well, I'm sure you saw that crazy example of Lesotho, that tiny mountaintop kingdom where they make Levi's and, they don't have a huge trade deficit with the United States, but they've been hit with, I think it's 47%, isn't it?
Yes, and this is the crazy thing. The way the tariffs were calculated, it has basically no basis in economic logic at all. The tariffs are highest for the countries that sell the most to the US. But often, in quite a lot of cases, Bangladesh, Lesotho, those are countries where they're making low-cost products and they're not buying a lot of US goods because they're relatively poor countries. So high tariffs on those countries is kind of fairly catastrophic. And openness to trade and selling out to big markets like the US and the EU is one of the things that has, fueled economic growth and growth out of poverty for those countries.
Only to a certain extent, though. But Donald Trump's wider argument that America has been restricted from accessing some markets to a large extent. I mean, he particularly points at China and the EU. Is he right at all?
Well, in terms of tariffs, no, he's not right at all. The general EU tariff on goods coming in from the US is about 2%. Lots of goods don't have tariffs at all.
But there are non-tariff barriers, aren't there?
It's true in a couple of cases. Cars, which they're very concerned about in the US, do have an EU tariff of about 10%. Where there is slightly more of an argument is on non-tariff barriers, on restrictions on particularly food safety standards keep a lot of American products out.
The chicken and the beef,
which were big issues in trade negotiations about 10 years ago. And then on regulations around the operation of the big tech companies. Now, from the European perspective, those regulations are there to protect EU consumers. They apply equally to EU companies as to US companies. So they're not tariffs. They're not trying to kind of tilt trade in favour of domestic production, which is generally the argument for tariffs. They're just regulations and rules about the operation of all businesses.
What's your prediction on this? I mean, given how the markets have gone over the last couple of hours, is it going to be enough to push this decision back at all?
I don't think it will be enough. I think it would be kind of difficult for the Trump administration to change their mind about such a big policy announcement overnight.
And he predicted and accepted that this would happen, right?
That this would happen and that there would be short-term pain sort of for long-term gain. I think the short-term pain is only just beginning and that increased pressure will come as prices for regular consumers start to go up in the coming weeks. And I think some of this could be rolled back quite quickly, probably in return for what could be quite minor concessions, wins. But that will be sold as big wins to the US public.
All right, well, we wait and see. But Martina, thanks so much for talking us through it all. Martina Lawless there, Research Professor at the ESRI.